Good evening. Hello. What's up, guys? Been a late night tonight. Open house for the kids. They start school tomorrow. I've been trying to encourage them to quit school, become traders. We'll never have to work. All right. Let's talk a little bit. I'm gonna be trying to be short-winded tonight. Let's just get down to business. I'm gonna try not to go off on tangents. You know how that's gonna go. We'll see. I made a tweet today, and I know about a bearish setup. First of all, I have not changed. The trend has not changed. What we have is a situation where the first indication of a possible trend change has presented itself. I made that tweet, and people want to know what time frames and this, that, and the other. And you're a strategic asset manager. Why in the hell would you need to ask me that? Do you not know what time frame I'm talking about? Damn. I hope you watch this. Anyhow, the daily, we talked about it. The daily is below. It's 8 and 21 for the first time, I think, since April. And the April had a bearish setup, but it was more of a weaker setup, and it failed. I think I was short that, and I covered it just as soon as the daily candle at the 8 to 21, the candle comes up. What I'm looking for here is the daily is below the 21. It gapped way below it. It came up and a wick touched the 21 sometime today. I don't know exactly what time it was, but I was just looking at the candle, and what and this may take a couple of, it may not play out, or it may take a couple of days to where it gives us a really beautiful setup for a short. And that's what I was talking about. Now, if the daily rips back above the averages, of course, this trade's not on. It's not off. But you're, as a trader, my job and your job as a trader is to try and draw the chart of the future. That's what we try and do. Every time we've come down in here, the market has, I mean, we had I think it's, I'm not going to pull the chart up. I'm just going by memory, but I just looked at it. If you go, I think it was April, somewhere along in there, maybe March, April. We got below, we had an inside day. And if the market breaks lower, it's become a good short trade. The market, I don't know whether earnings came out in April when it had that set up. Probably Apple or somebody did have earnings in the spring, and it immediately gapped the daily back above the 8 and 21, and then we've rallied ever since. This is the first time since that time we have come down below the averages. Am I a full out bear? Absolutely not. We're traders, okay? We're not going to argue the direction, but we're going to look at the setups that the direction is taking us. Okay, so right now we're below the averages, and that is one of the things I look for when I put on a short. If a stock is above the averages, it's a strong stock normally. I told you before, I don't try and catch tops, and now we're down here below the averages. A rally back to the averages. Hopefully, a inside day to trade off of. If not, we'll have there are a lot of trigger points out there to be watched. Let's talk about the Qs. I wrote down. You've got a monthly and a weekly and a daily trigger, and we can go inside. Inside the day, but not right now. The chart, the range that I tweeted out earlier, around the 372 area, the actual number is 371.77 on the Qs, 371.77. Okay, that is your uh, daily. That's the daily low today, and it's also that line. If we if we get below that line and set up, remember we're going to do it on higher time frames, like a 15 minute preferably. It may be a 5 minute, but if we break below that line, I'd like to see it rally back up to that 372 area and then come on down. That's what I'm going to be looking for. On the bullish side, if we break above the 376, whatever the exact number was, I think it was 376.62. I don't know if that's the exact line, but that's the exact wick. Okay, but that wick is right there on the line. It may be just a little above, below. I don't remember exactly. I think it's actually just a tad bit above, and that's fine. Sometimes the algos do that just in an effort to shake out other algos. We're still at 376.62, 371.77. That's the range we're in. On the Qs, I'm gonna look for the break of either side of that. It makes no damn difference to me what side it breaks on. It doesn't matter. I will probably trade it if it sets up. I'm not gonna buy the first breakout of that line. I'm gonna let it come back to it. If it doesn't come back to it, I'm not gonna say I'm gonna miss it because I'm not gonna trade it. I made a choice not to trade it because it didn't set up. That's the setup I like. Okay. The same with break below. I'm not. You can do it right when it breaks. Okay. But normally they have a gravitational pull back to the line, and then you'll have an algo trigger a sell program or a buy program. That's how it normally works, and that's what I look for, especially if they line up with the EMAs on a short time frame, or 15 minute, 8, whatever. If everything's lined up on the line, boom, that's what I'm looking for. Okay. I am not, people like I made this tweet like I'm the biggest bear in the world. I'm a trader. I don't care which way they go. Most of the trades I show you guys are two-sided trades. And most of the ones are, if they're the higher price stocks like a NVDA or an Apple or something, they're usually you can scalp a 0.234 or more off of these. NVIDIA is a chart I tweeted out, and NVIDIA got an inside day, and NVIDIA is a mover and a shaker. If it breaks NVIDIA breaks yesterday's candle, I think there was probably 5-6 points showing above that. Not saying it's going to be, but 2 or 3 points, and you should be happy on a scalp. On the downside of NVIDIA, if it loses this right here, it's got a lot of room to the downside. Not saying that that's what's happening. I'm telling you the trades I'm looking at. If it breaks lower, I think you got a lot more room to the downside on NVIDIA. Upside, you've got more resistance. Not saying NVIDIA can't go to the moon. I don't know. Don't matter. We're just going to play where it goes. That's what I'm going to trade, and that's what I'm telling you to look at. Apple's down 5 or 6 points. I don't know where exactly it closed. Apple's 11% of the NDX and like 7 or 8% of the Qs, and it's down. It'll be interesting to see how the rest of the tech sector does off of this. It's just kind of funny they lowered everybody's weighting, but that's fine. Hear that or another. I mean, so. That's what my tweet was about this afternoon. Was this is the first time we've had a chance to have a bearish setup. Okay, I'm going to be watching it like a hawk, and you should too, because if it breaks, I'm more inclined for the downside. Not saying I'm not going to play the upside, but I think the downside will have. The downside's got less resistance than the upside. There's a lot of resistance up. Now, if I had to say what I think is this. If you go look at the chart between the two ranges we've been in for the last 2 days, the 376, 372 level, that 4-point range, that's where we've been since we broke down below it yesterday around 10 o'clock, 10:15 in the morning. We've been in this 4-point range for almost 2 trading days. So if we get out of, we're going to get out of this range maybe tomorrow. I don't know. But when we do get out of it, If we get out of it to the upside, you're going to look at the Qs going to around the 381 level. The low side 365. Okay, I posted the levels out there so you can look at them. But 381 to if it breaks tomorrow, I think you're looking at the Qs 370. 5 or 6, 7 points down on the Qs. Upside. The 381, if we do rally there, would actually probably, and I was looking at it, put the daily right back on the 8. And as long as the 8 rejects the daily, okay, if it rejects the daily, then that's what we're gonna, that's the bearish setup that I'm looking for. Rallying back up to around it, and whether we rally there or not, or if we leg down now, then if we leg down, I think we draw a bear. I think we stop at 365 and draw a bear flag. That's my 2 scenarios. I think that's going to happen. We're going to rally it up to 381. I could be totally wrong. I think we will have trouble getting through higher than 381 right now. Especially with all the earnings, the big boys have pretty much what NVDA's reports at the end of this month, but the rest of them have already reported. Okay, so the fangs, the big tech, the 7 stocks that create whatever 25, 30. Actually, of the Qs, it was like 45% or something like that, maybe even higher. Maybe it's 50%. But anyhow, they've all reported, but NVIDIA. And we've had no rally off of their earnings. So the big guys that have really influenced the NASDAQ have reported, and we have not had a monster rally off of their earnings. To me, and I tweeted this last night, and I retweeted Bill Ackman. He went in great depth and detail why he was shorting the 30-year. If you read his analogy, you would see that we're at a point where they're going to, somebody sent this question last night, and I don't know if I responded to him or not, and I apologize if I didn't. Talk about they're going to do something. They're going to try and flatten the yield curve, and most of the time when the bond market adjusts, it's not a slow, gradual thing. So we're set up, whether it happens or not, we are set up for a bond event. I mean, like everybody says, oh, it was Fitch that done the downgrades. No big deal. It was Fitch. Fitch is the Dollar General of the grading services. Well, you know what? I shop a lot at Dollar General. I like Dollar General. And, you've had bonds, Fannie Mae, Freddie Mac, but all downgraded. Now, are we going to shake off the downgrade? I don't know. You got employment numbers tomorrow? That's going to, if they're bad numbers, I think we're going to have a leg down. If they're good numbers, we may have a leg up. We're going to break out of this range one way or the other, and we'll be ready either way. It makes I'm a trader. Basically, I'm in a neutral position right now. I don't really like the bull side, but the bull side has been the winning side the last 6-7 months. Basically, well, since October, then we had a little bit of pullback, but basically since January, so for the last going on 7 months, we've been rallying to the upside. And so we shall see. I mean, it's the first time we've been set up like this. This is a setup not to ignore, because a lot of times this is a very, very powerful setup if it triggers. Well, if it triggers it either way, but especially if we go back up and come back down, I think that we could see some downside action. I'm not a bear, but I will be prepared on the bearish side. I'll be prepared for the bullish side. My thinking is down. But can we just shake off this? Are we just going to shake off this bond downgrade? I mean, hell, we've shaken off everything else. Why not? I'm okay if we melt the market up. I mean, it's not going to be good for years to come, but it'll be short-term fun. Um, I mean, hell, look at Tupperware. I mean, like this is. I'm not even gonna go there, but that's something. To see the SEC should have that stock halted, but they're not. Um, the big guys are. My thing was up like over almost 3 points. Well, at 8 o'clock last time I looked at it. So, but anyhow, that's what I was. I wanted to just kind of go over that with you guys. What I was looking at, and what I'm watching, what I'm telling you to watch. If you trade the Qs, or your tech stocks are going to follow right in line with the Qs. Apple, you wanted the Apple chart with, I posted the Apple chart. Yeah, that's going to be, it's Apple. I really look for Apple to get bought on the open, and it'll be fun to see if it can rally, or when all the retail's going to come in. As a market maker, retail is going to come in at the open and buy this. At least that's what I think. Um, we'll see if Apple can rally and sell off, or is this a buying opportunity in Apple? But it's going to be one that we'll watch the levels on Apple. I mean, it's 11% of NDX, so it's definitely going to have a lot of effect on what the index does tomorrow. On the index, I was looking at it. Now we bounced. I think I tweeted. If not, I will tweet it. An index chart. We bounced off that bottom line, but there is a big gap below on the Nasdaq. There is a if we lose right there, I want to say it's like a 300 or 400 point drop possible in the Nasdaq. I'm not bearish. I'm telling you what's there. Okay, you got support, and then the way going all the way back to the first of the year, the way the candles have gapped, you don't have any support going through there. Now, are we going to fill that gap tomorrow? Next day, who knows? That's just something we need to watch. If it breaks that level, you've got a lot of downside that could happen. I am not saying any of this downside is for definite. Nothing is for definite. But this is the first time we've been in this position in a while. And, if the market can make it through this, then it's just stronger than hell. And if we melt up, we melt up. I don't argue with the market. I don't argue with anybody about the market. I just tell you what I see and what I think and what I've experienced. And if the market starts acting like it did in 2011, and I understand it was only Fitch that downgraded them, but still, I mean, it's a pretty big deal when you got your debt being downgraded and you've got bond auctions all throughout the month of August. Next week, we've got a big bond auction next week in the 20 and the 30 year. So it'll be interesting to see how those go. If we shake off the downgrade and we soak up all the bonds and we still haven't sold off, then yeah, we may go. We'll rally, and I don't have a problem with rally. Remember this: most of the times in the bull market wins in the end. Most of the time, if you go back and look at all the way back to when I started to whatever, I've seen these ebbs and flows, and the bull market. That doesn't mean a crummy ass stock's going to come back. I'm just saying the bull market in the end wins most of the time. Now, and when we came out of the bull market in 2000, y'all realize after the top in 2000 that the Nasdaq, all the averages went completely sideways and did not break out to new highs from the high of 2000. Did not break out to new highs until 2017. 17 years later. I'm not saying that's going to happen this time, because obviously we don't go down on bad news anymore. But we'll see where it's an interesting month right now. It's going to make for an interesting fall. If we if we do soak up all this bad news and hadn't sold off and all that, then yeah, we'll put on our bull outfit, put on our horns, and we'll run with the bulls or run with the bears. I don't care. We're gonna run one up. We don't want it to look. The last thing you want is for this stuff to go sideways. It makes really tough trading. Right now, I don't think we're in danger of that. If this short does set up, I think it's going to be, and if it does trigger, I think we're going to have some room to the downside, and we need it. Whether we go back to the bull thing or not, it would be healthy for a pullback. I mean, a good pullback. So we'll see. I mean, time will tell. Isn't bad news just more fuel for the upside? I mean, you know, they say we got to have a wall of worry to climb, and we damn so got a wall of worry. We got a real good wall of worry. You know, Gene, yes and no. I mean, I don't really look at bad news as fuel for an upside. Only what would make it, if always make a joke, if all the fat kids get on one side of the seesaw. So if all the fat kids get on the short side, then yeah, it's going to be fuel for the upside because they'll get short squeezed. And that's why being short is so hard. And I always tell people, you're not going to catch a crash. I promise you, you're not going to catch a crash. You might catch some of a crash, but you're not going to buy those ODTs for a nickel and they go to 100. It's not. That might be it's like winning the lottery. Okay, you're not going to do that. So I mean, you know, I take everything. You know, Gene, we'll just have to see how the market digests bad news. I mean, like right now, I mean, the market has actually done a. Beatwood, I'm starting to see more people looking for jobs. Yeah. I hope one of them wants to be a pool cleaner. I can't get anybody. You know, I hate vacuuming my damn pool. But I do it. I actually want to put fish in it, you know what I'm saying? But you know, Gene and Beatwood, I appreciate you guys asking. I meant, like, you know, and actually we got unemployment, and I think it's unemployment, and we got job numbers tomorrow in the morning. So it'll be interesting to see, you know, and if that's the case, the job numbers are going to come in good, and the market probably rallies on those numbers. So that's another, you know, that's another factor. But if the job numbers come in bad, you know, going back to Gene, I mean, I don't think that bad news is going to help fuel the market unless you just got a lopsided, you know, short. So I mean, you know, it's interesting times. I mean, like, it's kind of funny when we sit here and talk about you know, jobs. Here's the thing: like, the jobs numbers come out, but then when the revision comes out, they're a lot worse. But nobody's paying attention to those numbers. And you know, if the market's going to ignore those numbers, it's hard for me to ignore them because I read the revisions and I'm like, this is a lot worse than what they're reporting. But you don't ever see those revised numbers on the networks or whatever. At least that's what y'all told me, because I told you I don't watch CNBC, so how would I really know? I get all my news on Twitter because it's the best. Not really. But there are, and let me tell you this though, there are some really, really good, smart ass traders on Twitter. I'm going to tell you right now, I have had the privilege of some people introducing themselves to me, and you know who you are. They, just some really very good traders, and then most of them have no following on Twitter because they're just there, just you know, looking. But I've had some of them reach out and get in touch with me, and those few that were, you know, hedge fund managers and big time bond fund managers and people like that. I enjoy talking with those guys, and so, you know, there are some really good traders out there on Twitter, but they don't get out and share like I do. And the reason I ever started this was just because I'd never been a tweet person. I had a tweet account for years and never even really looked at it. And I started looking at Twitter and I was like, man, this is some terrible information they're giving out. This is not good at all. And so, anyhow, here we are. I'm doing YouTube for like 5 of you. Y'all tell somebody about me. But anyhow, guys, that's just my take. I said I was going to be quick tonight, so I think I'm going to wrap it up. It's 9:40. It's time for an old man like me to get in bed. I got like 20 minutes before my bedtime. Time for my glass of milk and cookies and stuff. So, but anyhow. All right, guys, Gene and B. Wood, appreciate you guys. I really do enjoy answering questions. It makes me easier. Steve, what's up? You're welcome, brother. I'm glad you guys joined me. If we all live close together, we could have just had this YouTube at a pub or something. That's one of the few things that I miss about like working in the office as a market maker. It was always fun going out after the day with the guys. And when you're in Atlanta, hey, we meet up at the Cheetah. I haven't been to the Cheetah in 25 years, man. So I'm due. I am due. So no, yeah, man. I actually, I've got a lot of connections in Atlanta. My wife is actually a partner in a CPA firm in Marietta, and I live about 2 hours south of Atlanta, just far enough away that I don't live in Atlanta, but close enough I can be there when I need to. But I got a brother in Fayetteville. He's got a booming business in Fayetteville. If you ever heard of Southern, if you ever need any electronic works, his name of his business is Southern Light and Sound, and he does all the police cars for Fayetteville and Union and all that. Man, he's got a booming business. But yeah, I told him to stay away from AMC, and he made a killing in AMC. So he never listens to me anymore. So yeah, I was like, man, are you buying that thing? He was buying it like when it was like $2 or $3, and the damn thing ran to 70, and he had it the whole time. I'm like, damn, I need to listen to you. Yeah, go Dogs, Braves, Falcons. Yeah, man, you could have left the Falcons part off of there, man. Maybe one day the Falcons. Maybe I thought in the third quarter with the Falcons finally, but the Braves are kicking ass, and the Dogs are too. So, all right, B Wood, we'll have to hook up. I hadn't met many people from Twitter or whatever, but I usually take in a couple of dog games every year. I went to the Oregon and the Tennessee game last year. I met my wife at the Georgia-Florida football game in 1997. It's pretty a little trivia for you. So, but anyhow, all right, guys, y'all have a good evening. Thank y'all for joining. And I do these, once a night or once every other night or something when I see something. But anyhow, you guys have a great night, and we'll see what it does tomorrow, man. It's gonna be interesting. We'll be on the edge of your seat if we get close to breaking down. I'm telling you. But anyhow, all right, have a good night. Peace out.